Hello, this is Mi Jun from the University of Michigan, upholding the principles of shareholder investment in the United States. Today is June 11th, and let's begin today's Michigan news. Once again today, welcome to Mi Jun, who is upholding the fundamentals of United States stock investing without change. Yesterday on the broadcast, I announced that for the first time in a long while, I would be holding a free ebook event for Mi Jun subscribers. This time, there are two types of ebooks that I am offering. The first one is a suite that I personally wrote, which is a direct biography of Chief Executive Officer Jensen Huang of Nvidia, and I also conducted an interview with him. It was a very long interview, lasting about an hour and a half. There was a lot of really good information about Nvidia investments here, and I organized the key content well and put it together in a book. And there's one more thing. I gather paid members and do a live broadcast once a month. Last month's broadcast had a lot of personally meaningful stories. It was because you asked a lot of good questions. So I plan to organize the most important parts of this broadcast and present them as an ebook. The ebook will be distributed for free for the next 9 days. 1 day has already passed, and already so many of you have signed up for the free ebook. Yesterday alone, a total of 1,570 people registered, which is a huge number. So this time, I am distributing the ebook for free. So for those of you who are watching Mi Jun, I conducted a brief survey to find out what expectations you have for the Mi Jun broadcast. Now, the final result isn't out yet, but if we take a quick look at the interim results, it was a survey where you could give multiple answers. Out of a total of 1,200 people, 76.3% of respondents told me that they wanted an analysis of the core topics, and the second most common response is right here. They asked me to summarize the current state of the United States stock market, and the third most common request was for an analysis of technology stocks and exchange-traded fund trends. So going forward, Mi Jun Broadcasting will focus more on the direction that you all want, which means we'll put more emphasis on analyzing the core topics. So I think we should structure the content mainly around summarizing the United States stock market situation and analyzing the trends of technology stocks and ETFs. So going forward, please continue to leave a lot of feedback and comments, and I'll keep providing a variety of content that can help with your investment activities. Now let's get started with today's United States stock market news prepared for June 11th. Today as well, I'll start by summarizing the United States stock market trends from yesterday. For the second time, many of you who answered the survey requested a summary of the United States stock market trends, so that's why I'm doing this. Yesterday, the market was dominated by a bearish trend, resulting in a limited number of stocks that rose. The upward momentum continues to be effective, and I think it will stay this way if you look at it like this. In fact, out of the 11 sectors that make up the S&P 500 yesterday, except for just one sector, industrials, all the other sectors recorded a plus. Energy, communication, and services were the top performing sectors. Third, consumer discretionary showed the best performance with an increase of over 1%. The technology sector that we pay attention to also recorded a solid rise of 0.56%. So what is the reason that the market sentiment continues to stay positive like this? Is it possible to interpret it this way, that the reason is because expectations for an interest rate cut are rising? Yesterday, there was also very good news that the United States and China had reached a tariff agreement. Now, only the decisions on Trump and Xi Jinping remain. If the leaders of the two countries just approve the contents agreed upon by the working level officials, then it's settled. Tariffs are likely to be partially lifted, and tensions between the two countries are expected to ease. Expectations are rising given the current situation. Well, since there was a lot more news yesterday, I guess the market's reaction was even bigger, right? It went up from 73% to 77.38% now. The fact that it's exceeding 77% is a positive short-term indicator, suggesting strong momentum, as shown here. Among the 500 companies that make up the S&P 500 now, 51.78%, that's 250 companies are above that level. Therefore, it can be interpreted that a significant number of stocks have also recovered their mid to long-term trends. Next is the fear index. The fear index continues to decline, 16.97. Therefore, the current situation remains quite stable. Originally, if the market doesn't show much volatility, it can feel quite dull. However, during these dull periods, if the market continues to rise, there's a high possibility that it will eventually provide good returns to investors. In a positive sense, that's how you should see it. The Fear and Greed Index is also alike. It's not rising or falling sharply, it's continuing to maintain a similar level. The fact that the market sentiment is neither overheated nor frozen can be interpreted positively, in my personal opinion. The market score has slightly increased, now at the top of the list. The inspection stage is a bit slow. Therefore, since the market is entering a very overheated state, I would like to suggest that it is time to carefully examine whether highly valued stocks can actually realize their expected earnings. Meiteor's stock performance was also good. Out of 19 sectors, 11 sectors showed an upward trend. First of all, at the very top, Tesla surged by as much as 5.67%. Second, Taiwan Semiconductor rose by 2.64%, B2 Plus by 1.57%, Alphabet by 1.43%, Advanced Micro Devices Plus by 1.24%, and Third Trade Desk by 1.23%. In addition, Meta was up by 1.20%, Nvidia up by 0.93%, Palantir up by 0.57%, Amazon up by 0.29%, and Broadcom up by 0.14%. The remaining stocks closed lower, but most of them saw only small declines of less than 1%. Nextera fell 0.07%, Strategy declined 0.24%, Talon Energy dropped 0.75%, Uber decreased 0.84%, Bitcoin also fell, Celestica was down 0.93%, Vista slid 2.79%, and CrowdStrike Technology plunged 3.60%. Among them, Tesla's stock price is showing a sharp rebound. There was a good reason for that. First, let me show you one article. It's a hot topic, and it was published today. Please click and take a look for a moment. Tesla Chief Executive Officer Elon Musk left a comment on some posts related to President Donald Trump. He said it went too far. After the conflict between Elon Musk and United States President Donald Trump, Musk recently expressed regret, saying that some social media posts supporting the former president went too far. He reflected on some of last week's posts about the president. He said, "It went too far. I crossed the line." He left this message on X early Wednesday morning. Investors anticipated this sincere attitude, and it seems things will work out from this perspective. So right now, Tesla's stock price is up 2.31% in after-hours trading. There's one more article that's getting attention. This time, it's about Tesla's robotaxi, and some concrete details are being reported. It's reported that operations are scheduled to begin on June 22nd. Elon Musk announced through his social media platform X that, when asked by a user about when general operations for the public would begin, the current plan is June 22nd. And what about the free ride from Tesla's factory to the customer's home? He added that it will be launched on his birthday, June 28th. Of course, since we are extremely concerned about safety now, he added that the date could change. We were looking forward to June 12th, but you could say the excitement has been delayed a bit. However, Elon Musk never directly announced June 12th, but Bloomberg reported, citing internal sources, that Tesla was planning to launch the robotaxi service for commercial use on June 12th. However, the date was not officially announced, it was only confirmed through leaks and interviews, so the initial reports were based on internal targets. That's how you should see it. The official date that Musk directly announced yesterday is June 22nd, so that's what you should consider. Recently, as the stock price successfully rebounded, the momentum shifted to positive again. As you can see, out of the 26 recommendations, 6 are buy, 8 are hold, and 12 are sell. Now, let me briefly show you the stock chart. This is Tesla's stock price. For a long period, it has successfully built a solid support line by steadily absorbing large-scale selling pressure. This area is between $287 and $300 was the resistance point. And what about $287? The yellow line is the key, located precisely at the 61% retracement line. So if you look here, you can see that the price dropped sharply and then bounced back after being supported at the 60-day moving average. Now here's what's important. The 60-day moving average forms a solid support line, while the 20-day moving average, shown as a yellow line, acts as a resistance line above it. As it recovers the 21-day moving average, will it retest the $350 to $375 range, or if blocked there again, will it fall back to the support zone around $287 to $300? This is the key turning point that will determine the price trend for the next 1 or 2 weeks. That's how you should look at it. Now, I explained using a positive scenario and an adjustment scenario. If the current upward momentum continues, the next target will be the first resistance line at 365 to 370. Breaking through this level could lead to further gains. However, the stock price is rising rapidly short term. Therefore, there is a high possibility that a small adjustment for profit taking may occur. That's how it is. The area around 300, the 61-day moving average, and the 287 level will serve as crucial support zones. So, if there is another technical adjustment, just like before, the $287 level, the 61-day moving average, and the $300 level will serve as support lines again. The upward trend is valid, and I believe organizing things this way is possible. So, from a technical perspective, when we look at it, following the Trump summit, the stock price, which had surged on positive news, suddenly showed signs of a pullback. The positive part saw high trading volume, forming a large positive candlestick as volume increased. From a technical standpoint, this rebound signal holds great significance. That's the proper way to interpret it. Therefore, from a technical perspective, it can now be interpreted that the downward trend has ended and a new upward trend is beginning. Of course, this kind of trend can only be sustained if there is a successful launch of robot taxi. Before I read the next article, I would like to deliver one very important message regarding investment strategies on today's broadcast. To do that, I think I should read one of the comments first. This is a very important comment left by someone using the identification SEOBay1976, and I think it would be good if you could understand why I am quoting this comment. A very important topic is coming up. If you look here, it seems like you keep doubting only Nvidia. It would be good to look at it from various perspectives. That's what was written. First of all, I sincerely thank Sioni Nim for leaving such a thoughtful comment. Below, I wrote a reply to this comment, and this is how I responded. As an investor whose goal is to retire through American stock investment, my channel aims to share the process of my investments and my investment strategies transparently, without reservation. And the paid members probably already know this well, but I wanted to mention it again at this point. In the portfolio I manage, Nvidia currently accounts for about 15%. Now, let me talk about that. At this point, as an investor, Nvidia is the stock I have the most conviction in. That's how you can interpret it. So in that sense, I'm investing a significant portion of my valuable money in just one stock, Nvidia. If, for example, in the content I create, I talk more about other stocks, wouldn't that be a less responsible action? That's what I think. Now, if I'm currently focusing my investments on Nvidia, but later I discover a stock with a higher risk-to-reward ratio than Nvidia, then of course, in my portfolio, the proportion of that stock will increase compared to Nvidia. And also, in the content I create, there's a high possibility that the content about that stock will increase more than the content about Nvidia. So, the reason I often talk about Nvidia is because I have that much conviction in the stock called Nvidia. I hope you take this part into consideration. Actually, I received a comment like this, and this was on May 31, 2025. After that, Nvidia's stock price saw an additional short-term increase of 6.53%. So, even if you had bought it at that time, Nvidia investment would have been successful. That's the part I wanted to show you. Now, there's one more very important thing I'd like to tell you. As for Nvidia right now, since its listing, Nvidia has risen by as much as 3,590,800% up to now. So, what's the reason for showing you such an incredible number? We usually determine the timing of buying and selling based on the date. And when we try to determine the value of a stock, whether it's the average price I have or my rate of return, I work hard to make decisions based only on those factors. But in reality, theoretically, a company has infinite existence. Do you know why this graph here can record 3,509,800%? Even before we started, NVIDIA already existed, and from then on, it showed tremendous growth repeatedly. Now, let's say an investor bought NVIDIA stock at the time of its initial public offering. Let's calculate the value like this. Now, let's say the investment was held for 10 years until September 2008. So, if you invested for 10 years, the return would be 600%. Now, a 600% return means your investment grew sevenfold. At this point, another investor entered the stock market. A new investor, right? And let's say he picked Nvidia stock, but Nvidia had already gone up sevenfold. At that point, if he buys in, he'll probably regret it. It's easy to regret not investing in companies like Nvidia in 1999 and judge in hindsight after entering the United States stock market later. But even if you had bought Nvidia back then, Nvidia's stock price has risen as much as 68,452% up to now. When you see such an overwhelming number, it feels unrealistic. Let's narrow it down to 5 years. 5 years ago, I bought Nvidia for the first time. And let's say, for example, that about 3 years have passed since then. Let's return to 2023. By the middle of 2023, after holding NVIDIA stock for 3 years like this, the rate of return is 336%. So at this point, what would it be like for an investor who first bought NVIDIA stock in May 2023? I was too late. Miju was lucky. People often judge stocks based on past returns, like wondering how much they could have made if they bought NVIDIA in 2020. This leads them to believe the possibility of making a similar decision is high. Now, but if you had bought NVIDIA at that point, the current rate of increase is a staggering 269%. So, in less than 2 years, it has gone up about 3.5 times, more than 3.5 times. So, what lesson can we learn from this? When we make investment decisions, you should never look at the past. From now on, you have to focus only on whether this stock, this company, will grow in the future. Forget about the performance up until yesterday. Stock investment is not like a marathon. It's more accurate to see it as a 100-meter race that repeats every day. So you should ignore how this stock performed up until yesterday. When the United States stock market opens again today, it's like all the companies are lining up at the starting line once more. That's how you should see it. So in today's market, which stock will show the best upward trend? And you can expect this pattern to repeat the next day as well. So, it's not important how much Nvidia's stock has risen in the past. What's important now is this. So the only thing you should focus on here is predicting how much this stock will rise in the next month, the next 6 months, or the next year. Since I'm a bit excited, I made my explanation a bit long. Right in front of us, I explained in detail why there is so much content related to envy in the previous channel. Well, anyway, today I have no choice but to talk about something related to Nvidia again. I'm going to read you an article, and actually in this article, OpenAI and Google appear. In fact, Nvidia isn't mentioned even once in the article. However, I believe this article is very important for evaluating Nvidia's investment value. That's my personal opinion. Why don't you read the article yourself to see what it's about? According to 3 sources cited by Reuters, in order to meet the increasing computing demand from open artificial intelligence, Alphabet is planning to add Google Cloud services. And this news? It's a surprising collaboration between the 2 main competitors in the field of artificial intelligence. That's right. Currently, when it comes to the most powerful app in the artificial intelligence field, one is Open Artificial Intelligence's ChatGPT and the other is Alphabet's Gemini. Despite the intensifying competition, the 2 companies are joining forces, which is significant news. So what is this news about? It shows how the massive computing resources needed to train and deploy artificial intelligence models are reshaping the competitive landscape in the artificial intelligence industry. The current computing demand has created an extremely difficult situation with limited solutions, which is the topic of discussion. Open Artificial Intelligence is exploring options beyond its primary supporter, Microsoft, to diversify its computing resources and access the latest technology. The company realizes it can no longer solely depend on Microsoft for its needs. This also includes a large-scale Stargate data center project. Many of you have likely heard of the Stargate project, which involves a tremendous amount of computing power. This isn't Microsoft. You've probably heard of Oracle. Now, from Google's perspective as well, They plan to provide additional computing capacity for training and running artificial intelligence models on top of the existing artificial intelligence infrastructure. All right? This move is seen as the biggest threat to Google's dominant search business in decades, as open artificial intelligence's development of ChatGPT has emerged. Google search, right? It dominated an era with a market share that surpassed 90%. But now, ChatGPT is shaking up this era. As ChatGPT has created a huge threat, now these two companies have joined hands. Recently, Sundar Pichai of Google mentioned that the artificial intelligence competition might not be a winner-takes-all market. So it means that both ChatGPT and Gemini could succeed. This is how some analysts are interpreting the message. This contract shows that the two companies are likely to engage in fierce competition to meet the growing demand for computing power. What this means is, right now it's all about competition, and the most important thing is GPUs. That's what they're talking about. So, while this is seen as a big win for Google Cloud, the fact that ChatGPT is gradually becoming a major threat to Google's search dominance continues to worry us. We're concerned, and that's what we're pointing out. As you all know, it's not even 3 years since ChatGPT was launched. It was at the end of 2022, right? That was when ChatGPT came out. Open artificial intelligence not only trained large language models, but also responded to the growing demand for computing power needed to process information so that people could use these models. I've been telling you all about this a lot since the end of last year. Now we're moving from training to the application side, and this kind of application is called inference. Inference means artificial intelligence thinking or making decisions. When you try to do a certain task, you need computing power to accomplish it. That's how it works. Let me briefly show you the inference process. I'm now on ChatGPT, and I'll ask a question to ChatGPT. I asked about the YouTube channel called Mijun, which covers the lives of Korean immigrants in the United States and its creator. Next, you'll notice thinking displayed, indicating that the artificial intelligence is analyzing and processing information. The system will then provide and organize the analysis results. You might remember this as well, but when ChatGPT first came out, it would immediately answer based on the data it already had. But now, we can see here that ChatGPT operates in a very different way. Now, it searches several websites and messages like this appear. So, it's actually a very simple question, but there's a lot of reasoning involved here. You're using computing power right now, using the GPU to perform various types of analysis. Through this process, we can see that ChatGPT producer is putting in a lot of effort to provide accurate answers based on such in-depth analysis here. So far, I haven't received any information about the channel for retiring with United States stocks. Through ChatGPT, we can see the effort, thoughtfulness, and dedication put in to deliver accurate results to us through various stages. It's really impressive to see such dedication over a long period of time. We can directly see that a huge amount of computing power is being used. And here you can see that detailed information is being provided. The answers are not just a line or two, they are giving us a lot of diverse information, which we can clearly see. Now let's continue reading the article. Anyway, you can see that the generative function keeps evolving like this. And as applications increase here and there, the amount of necessary computing power ultimately rises exponentially. What was the significant event related to OpenAI at the start of this year? They secured a partnership with SoftBank and Oracle for the $5 trillion scale Stargate infrastructure program. To secure more computers, they're talking about computing power. To do this, they signed contracts worth tens of billions with CoreWeave. Also, within this year, they plan to finish designing their own first chip so that they can reduce their dependence on external hardware suppliers. They are making various efforts, as you can see. Now, has open artificial intelligence been added to Google's customer list? This is an article showing how major industries are accelerating their business growth in the cloud by utilizing self-developed artificial intelligence technology from hardware to software. So that's what this article is about. It definitely seems to be good news for Google. Google Cloud, which accounts for 12% of Alphabet's sales in 2024. As it rides the wave of the artificial intelligence startup boom, it is trying to differentiate itself from Amazon and Microsoft by securing mid-sized research institutes and providers. What this means is that at the previous training stage, Amazon and Microsoft's cloud services were more advantageous. The reason is that the early stages of artificial intelligence rely heavily on training. But the important thing now is that things are shifting toward the application side. The training stage is very important, so at the training stage, it's more important to secure a variety of large and small companies. So in the case of Google, they're clearly one step ahead. The artificial intelligence startup scene mostly consists of companies that develop and sell various applications, in other words, software. So, from the very beginning, companies like these have been Google's main target, as you can see. Now, there's a problem with this. Google wasn't able to fully satisfy the cloud customer demand even before the split because their internal computing capacity was insufficient. This part needs to be resolved. The reason is, in cases like Google, they have a lot of artificial intelligence startup clients, and as they continue to develop applications and perform various operations, they need to provide computing power. But the problem is, Google also uses artificial intelligence in various areas. Gemini and other systems that need to run continuously require an enormous amount of computing power. So, for customers and for Google's internal artificial intelligence research, Google needs an enormous amount of computing power. That's what it looks like. Now let's take a look at Mihyun's summary. The biggest rival in the artificial intelligence field is open artificial intelligence, and the fact that Google has signed a cloud service contract goes beyond simple business cooperation, in my opinion. Let me explain the significance of this. This is a symbolic case that clearly shows the entire industry is facing a serious shortage of computing power. Regardless of my evaluation, this is the point. If there wasn't a shortage of computing power, this kind of cooperation wouldn't have happened. That's how I see it. Now, there are several reasons why computing power becomes insufficient, but let me explain about 3 of them. Just like I showed you earlier. Whether it's generative pre-trained transformer, 4o Gemini or Ultrafra, the latest artificial intelligence models keep emerging, and these new artificial intelligence models have more than 10 times the number of parameters or context compared to before. Just like what you saw earlier, even to make a single answer, it requires an incredible amount of thought. It's using an enormous amount of energy. So, we can see that the amount of computing power needed is increasing exponentially. And at the same time, the number of applications using artificial intelligence and the number of users are also increasing exponentially. As I mentioned a few days ago, there are only about 10 artificial intelligence models that I currently subscribe to. That's why so many startups are emerging, and the number of users like me who use application software from these startup companies is also increasing rapidly. Nowadays, learning requires more than just materials. A computer is also necessary for creating and experimenting simultaneously. Therefore, it can be concluded that there is a growing demand for secondary investment. I've just given you 3 reasons, including this one. The demand for computing power necessary for model training and application service operation is also increasing, as you can see. Therefore, this shortage of computing power is naturally leading to a technological investment war among hyperscalers like Microsoft, Google, Amazon, and Meta. The reason is that, in order not to fall behind in the artificial intelligence competition, these companies' massive self-investment is no longer a choice. It's a necessity for survival. They have no option but to make enormous investments in themselves, and that's how we can understand this situation. And the most obvious beneficiary of this investment war is, of course, Nvidia. Of course, in the long run, these major tech companies are developing their own chips, and new competitors continue to emerge. There are certainly risk factors. However, in my view, for now, it's not a major concern. In the current situation, the reason why megatech companies are developing their own chips is not necessarily to replace Nvidia GPUs. It's just that Nvidia GPUs are expensive, that's all. Therefore, I think the reason they're developing their own chips is because they're worried they might not be able to secure enough GPUs, which are called the new oil of the artificial intelligence era. Now let me summarize. Open Artificial Intelligence, the biggest competitor in the artificial intelligence industry, even announced a partnership with Google. Artificial intelligence companies are doing this. Now even competitors like Infura have joined, and all GPUs are being welcomed into this alliance. It's because there's a shortage of GPUs. To survive and win the artificial intelligence race, you must get ahead despite companies with more GPUs receiving praise. The trajectory is clear. In other words, it's both short-term and mid-term. Because the speed of artificial intelligence technology development and the increase in computing demand are growing so rapidly, almost all of the market demand, proven performance and ecosystem are inevitably going to Nvidia. That's my personal judgment. Therefore, unprecedented investments in infrastructure by hyperscalers and megatech companies are expected to continue for the next 2 to 3 years. Therefore, I think this is a structural benefit that supports NVIDIA's sales and profit growth potential. At least for the next 1 or 2 years, I don't see any reason to stop investing in NVIDIA stock. For the last segment prepared today, I have prepared an American stock podcast for the first time in a while. Personally, I think one of the biggest strengths of the Mid-June podcast is its relaxed conversational format. Because of this, whether it's a difficult topic or a detailed report, the Mid-June podcast has always been a great way to understand them. So, since there's a rather complicated article today, I plan to share it with you all through the Mid-June podcast. I'm not sure if any of you are investing in strategy stocks. Well, just like many of you might already know, I've been holding strategy stocks in my portfolio for over a year now. This strategy company continues to show signs of growth, so it's not that easy to just follow along and understand how this company is buying Bitcoin and how they're leveraging it. It's because you can see that they're constantly evolving. So, through this article, it clearly explains what kind of relationship strategy has with Bitcoin and how they're using leverage with Bitcoin. This article organizes everything in a very clear way. Because the article is quite difficult, I'll try to explain it a bit more simply through this podcast so that everyone can understand it more easily. That's it for today's broadcast. I sincerely thank everyone who stayed with us until the end. We will keep fighting together until the day we all retire from investing in United States stocks. Have a happy day and thank you.
Yes, hello? Hello, this is Michael Family. Today, I want to review the latest strategy analysis article from MicroStrategy with you in detail. Especially the newly released STRD is the key point here. Let's take a closer look at what this means for the investment decisions of our Michael family members. Rather than just rumors or reactions, today I want to focus more on analysis. Our channel is a place where we provide deeper analysis for the Michael family members. Now, in the big picture of Michael Saylor, what kind of role does this STRD actually play? First, let's briefly review the traditional financial management tools we've been using. MSTR, STRK, STRF. There were many different types, correct? Yes.
That's right. MicroStrategy really tried to buy Bitcoin and collected a lot of different cards, right? Usually MSTR is the most sensitive to the price of Bitcoin among the stocks. Convertible bonds, senior notes, and direct investments are all pretty similar. And STRK had an 8% interest rate, plus there was an option to convert to stock, right? So it was kind of a hybrid between bonds and stocks. Also, STRF had a pretty high interest rate at 10%, senior notes, so they were for people who valued a bit more stability.
But now, something called STRD has just come out, and looking at it, it also offers a 10% yield, but it's said to be riskier than STRK or STRF. Also, the way dividends are paid is quite arbitrary, depending on the company's decision, so if they skip a dividend, that's it. You can't get it later. That's what it means. That's right. At first glance, the yield is the same as STRF, but it seems much riskier. So why did they even issue this in the first place?
Oh, the fact that it looks risky, that's actually the key point. That's right at first glance. It looks like a similar product to junk bonds for investors who want higher returns and are willing to take on more risk. But could it be that the real purpose is actually a bit more subtle? The hidden goal behind the issuance of this STID is actually a bit more strategic. It's really about raising the value of the top priority STRF.
Yes, by issuing lower priority stocks, they increase the value of the higher priority stocks. Wow, this is where it really gets interesting. But how is that even possible?
Well, STID is lower in priority than STRF or STRK. So if there's a problem during the cycle, it means that the swap order comes last. In this case, STRD acts as a kind of safety cushion, receiving support from the bottom, like a safety net. If any difficulties arise, STRD absorbs the impact first, so STRF or STRK in front of it become relatively safer as a result. It's like installing a shock absorber at a building's base. And since you use the money earned from launching STRD to buy more Bitcoin, it also has the effect of increasing the overall portfolio value. When this happens, STRF will look much more attractive to more conservative investors. Oh, Since STRF is backed by something called STRD at the bottom, it seems even safer. That's how people start to think. In reality, STRF was already trading at a higher price than its face value, so its actual yield dropped to as low as 9.6%. Based on the article's analysis, STRD may lead to a further increase in STRFE's price and a potential drop in actual yield to 4 to 5% in the future.
Oh, so right now, at first glance, it looks like they're issuing STRF as a high-yield stock with a 10% yield, but in the end, after all the calculations, they're planning to issue STRF as a low-yield stock with an actual yield of 4% or 5% to attract money. That's the big picture, isn't it? Well, from the perspective of ordinary shareholders, the concern that my stock value will be diluted decreases, and since Bitcoin can continue to be bought, it might not be such a bad thing. What do you think about this strategy? Everyone in our Mijunpei Milri, do you find it too complicated or maybe a bit aggressive?
Yes.
If you actually take a look at the recent interest rate trends, from May 26 to June, one MSTR issued convertible bonds using only STRK and STRF without any other assets and raised $74.6 million. From a long-term view, they're attempting to boost leverage by using preferred shares for funding while minimizing common stock value dilution. This reveals their management's intentions. Overall, MicroStrategy is using this structure in several layers, maximizing and optimizing it to really leverage their leverage to the extreme. STRD is the newest addition to this complex Bitcoin accumulation system. That's what it is. This strategy aims to create a virtuous cycle, buying Bitcoin with a small capital, holding it for value appreciation, then leveraging better conditions to raise more funds and buy more Bitcoin, repeating the process. Yes?
In summary, MicroStrategy's new preferred stock, STRD, is not merely a high-yield 10% interest product. It's designed to increase the investment leverage of the existing STRF preferred stock, enabling them to lower costs when raising money in the future. And aggressively, they're trying to minimize the dilution of common shareholders while maximizing the efficiency of raising Bitcoin. Wow, you could say this is part of Michael Saylor's really clever financial strategy.
That's right. Of course, whether this bold financial strategy will succeed or not will ultimately depend on the price of Bitcoin, but the strategy itself is really creative and daring. That's how I see it. I'll keep that in mind.
Well, I hope that through today's analysis, you now have a slightly clearer understanding of Michael Saylor's complex self-financing strategy. Lastly, I'd like to ask one more question. How much conviction does Michael Saylor really have about the future, to the point where he is so aggressive and all in with his financial strategies for this one asset called Bitcoin? I think it's a question worth pondering deeply. Ladies and gentlemen of the United States and China family, I'll return with more useful information in the next analysis.
Thank you.